Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And today is Tuesday, September 23rd, 2025. And I'll be on my way to New York City this afternoon. I'll be on with Mornings with Maria tomorrow from 6 to 9, and then with Stuart Varney on Friday from 10 to 11. So make sure that you are up and you're watching and you're joining me. Anyway, here are the things that you need to know to get your day started. Well, it was another tech headline yesterday, and stocks continued to surge. Nasdaq, S&P, and Nvidia all making new highs. Now, you need to understand sector weightings in the market and in your portfolio so that you don't get caught. Oil continues to churn. Bonds are down a little bit. And gold, well, that just continues to push higher. And watch some of the eco data today. And what do we have for dinner today? We're going to have the easy chicken skewers. Put them on the grill. They're so simple to make, and the kids will love them. Okay. Yesterday morning, I had pointed out a handful of tech headlines from last week that caused anything with a chip or with AI to just surge higher, right? I said it's almost a daily thing. Well, scratch your almost, because it is a daily thing. Case in point, yesterday we just got another tech headline. Nvidia to invest $100 billion in OpenAI data center push. That was all the algos needed. They piled in. They sent the Nasdaq to yet another new high. The Mag 7 to another new high. And Nvidia up 3.6% to another new high. From there, anything tech derivatives, well, they caught fire as well. Quantum tech again up 1.5%. Semis up 1.7%. Cyber up 0.2%. Expanded tech up 1%. Robotics and AI up 2.8%. And because the headline was about data centers, boom, the Global X Data Center ETF, the DCTR, surged by 2.5%, with names like Equinix up 0.7%, Digital Realty up 1.6%, and APLD ripping 19%. And when the final bell rang, here's what it looked like. The Dow added 66 points, the SP up 30, the Nasdaq up 160, the Russell added 14, the transports ended flat, the equal weight was only up 4 points, while the Mag 7 gained 250. Of course it did. Now again, look at what happened between the S&P and the equal weighted SP, right? One finished up 0.5%, the other one barely rose. The divergence tells you something, right? It tells you that tech, thanks to its outsized weighting in the market cap index, is pulling the S&P up while the broader market is digesting. Now, just to be clear so that you understand, here are the weightings of the 11 S&P sectors, right? So infotech is 34.7% of the S&P. Financials at 13.5%. Consumer discretionary up 10.7%. Communications are 10%. Healthcare is about 9%. Industrial is about 8%. Consumer staples about 4.7%. Energy is 3%. And utilities are about 2.3%. Real estate's 2%, and basic materials are way down at 1.7% of the S&P. So when you hear information technology at 34.7% of the S&P, what that means is more than a third of the entire index's value is tied up in tech companies. The S&P is a market cap weighted index. So the bigger the company, the bigger the influence. And because the giants like Apple, Microsoft, and Nvidia have ballooned in value, tech now carries an outsized weight in the index. So if the S&P 500 is up on any given day, odds are it's because tech is driving it, like yesterday. Flip side, if tech rolls over, the whole index is going to feel the pain. Now, that's why you'll often see the divergence between the cap-weighted, where tech rules, and the equal-weighted, where every company has the same influence. One can be surging while the other is flat or even lower. A reminder that the market isn't as broad as the headline index might make it seem, right? You'll see that in their year-to-date returns as well. The S&P is up 13.8%. The equal weight's only up 7%. Now, of the 11 S&P sectors, only tech and communications remain stretched on the RSI scale. The XLK is now is at 75.82, up from 72.5 yesterday morning. The XLC was sitting at 78.6, but came under some pressure yesterday. It eased back now to 71.89. Still overbought, just a little less so. Remember, the other 9 are nowhere near being overbought. So here's the kicker. Those two sectors alone make up 44.7% of the entire S&P. Nearly half the index is sitting just in 2 buckets. So if the algos get an ass ache and we get hit with a headline that's unexpected, I'd say watch out. Tech and communications will be the first to go, right? It's a tangled web we weave, which is, again, why you need to be diversified and balanced. And with all this excitement, it's important that investors be responsibly bullish, as Tony Pasquarello, partner and global head of hedge fund coverage at Goldman Sachs, tells us. What have I been saying all along? Responsibly bullish means you're positive on the markets, but you have guardrails. You acknowledge the upside because the trend in the earnings and the data point, the macro data points, do point higher, but you're responsible because you manage those positions wisely. You stay diversified, you set your stop limits on the downside, you recognize the risks to valuations, policy shifts, or geopolitics. Now, bonds gave back a little, but nothing to write home about. The TLT and TLH lost about 0.3. The 10-year yield stands at 4.13. The 30 years at 4.74. No issue. Shorter durations of 3 and 6 month bills are paying you 3.8% and 3.7% respectively. Oil's trading at $62.50, still below all three trend lines. Gold continues to surge higher. The move just won't quit. This morning it's up another $40 at $37.86 an ounce. China has made it clear that they want to become the player in global gold markets. Yesterday, Bloomberg reported that People's Bank of China is positioning itself as the newest custodian of foreign reserves. Essentially, they want China-friendly countries to buy gold and then ship and store it in China. Really? In addition, the move and excitement in gold has created a massive momentum play, and you can come up with any other number of reasons why the metal continues to surge. It is up nearly 8% above its nearest trend line, a level that is proven to be a headwind, but that doesn't mean that the momentum won't continue to push it higher in the short term. And guess what? U.S. futures this morning, they are trapped. Dow futures are up 55, but the S&P is flat, Nasdaq is flat, Russell is flat. Eco data today is all about services and manufacturing PMIs. Both are expected to remain in the expansion zone. European markets, though, well, they're all a bit higher, up about 0.6% across the board. Eurozone consumer confidence was up, did edge up a bit higher, up 0.6 points, but it remains negative at negative 14.9. S&P closed at 66.93, up 30 points after testing as high as 66.98, almost 6,700. The chart tells you a lot. You can draw trend lines that suggest a sell-off would find support at 65.60, which is down about 2%, or way down at 64.30, which is down about 8%. And since we're in uncharted territory to the upside, it's anyone's guess. Year-end estimates run from 5,800 by HBSC down 13% from here, or 7,100 at Oppenheimer up another 6% from here. Most of the others are really between 64 and 6,800. Remember, forecasts remain fluid, and we can expect more tweaks after, guess what? Third quarter earnings season, which starts in a couple of weeks. Investing remains exciting, yet frustrating at the same time. It's about the plan, so make sure you have one. It's about time in the markets, discipline, and risk management. Okay, let's review your plan. Call me for a complimentary, no obligation portfolio analysis of 561-931-0190. Okay, what do we have for dinner tonight? We're going to have the simple but delicious chicken skewers, because I try to make it simple for you during the week, so it's not a lot of stress. They take about 20 minutes to make. For this, you need boneless chicken cut into cubes. You can either use the breasts or the thighs, depending on what white meat, dark meat. I like the dark meat, so I'll use the thighs. You want garlic, you want parsley, you want lemon zest, you want lemon juice, you want salt and pepper, olive oil, and seasoned breadcrumbs. You want to preheat your grill. Get it nice and hot, clean it with the brush, this way it's ready. Now, in a bowl, you're going to add the cut-up chicken, the olive oil, and all the seasonings, the zest, the lemon juice, and all the seasonings. Mix it to coat. Then after that, you're going to add in, a lot of breadcrumbs, enough so that when you can coat all the chicken, right, it's all covered in the breadcrumbs. Now you're going to make the skewers. Now, if you're using wooden skewers, make sure that you soak them in water before you use them. After you've made the skewers, when you're ready, go back to your grill, turn the heat down to medium, and place the skewers on the grill. The trick here is to cook them slowly so they don't burn and dry out. So turn the heat down low and just cook them slowly. Serve this simple. Just serve this with a salad and vegetables, your choice. I would always make roasted potatoes because I love the roasted potatoes with these chicken skewers. It's simple, it's easy, and we'll find that the kids will love it. In any event, it's still dark outside here in Florida. I'm on my way to New York City this afternoon, so I'll see you live from Fox Business tomorrow morning, 6 to 9. Until then, take good care.